global events impact all markets and they impact bond markets in particular as well. You can't really think of the bond market. There are short-term bonds, there might be 1, 2, 3 years, up to 5 years, and then there are long-term bonds, 10, 20 and 30 years and even more in some cases. And those long-term bonds are very, very sensitive to interest rate change expectations or inflation. So when you do get an expectation change of, say, 1% rise in yields, the price might fall 20% as a result of that. Just think of a bond that's paying me back tomorrow. It doesn't matter what the RBA does, it doesn't matter what anybody does, they're paying me back tomorrow. It's $100 I'm getting tomorrow versus $100 in 30 years. That length of time until whenever you're getting paid back is fundamentally important. XTBs cover bonds that are between 1 year and 6 years is about the longest, so they are less sensitive than much longer dated 10, 20 and 30 year government bonds. The interesting thing at the end of 2016 you can see is those corporate bonds, there's a little slight downturn you can see in the graph, but it isn't a very significant downturn. When the Trump election occurred and there was concerns about inflation in the US this year, 2017 and into next year, phrases coined like bond market rout, etc. And what that's actually referring to is the very long dated end of the bond market. The curve for bonds, the yield curve, is steepening, meaning that cash is going to be cheaper, bonds in the middle are going to be a little bit more expensive, and longer term bonds are going to yield have a higher yield. So that's really a steepening of the curve that we've seen. In Australia, we've been on a downward cycle and we're at an all-time low at the moment. The general consensus, if you look at what the market trends are for 2017, is we probably won't have any changes in 2017 to the RBA cash rate. It will stay at 1.5%, with a slight chance that in the last quarter there may well be, we're heading towards an environment where there will be the first rate increase in Australia, which may well be in 2018 or maybe halfway through 2018. So we're not looking at a volatile interest rate outlook for the cash rate in Australia, and so therefore the outlook for shorter dated bonds, corporate bonds, XTBs over corporate bonds, is that we will probably get more of the same from 2016. That slow, steady total return profile you get from investing in corporate bonds without very significant changes. It is always there, interest rate risk. Of course, there's a chance the RBA could cut rates again to 1.25%. If that happens, then the bond prices will rise in value. If you want a rule of thumb, if there was a 50 basis points surprise increase, a 3-year bond should fall in value 1.4%. If there was a 50 basis points surprise cut, then they should increase 1.4%. You've got to have a view on where do I think rates are going, and most individuals aren't forming personal views on that. They're reading the tea leaves of what everybody in the market thinks, and the general consensus at the moment is not a lot's going to happen in 2017, with a slight chance of both an increase and a decrease occurring at some point, and it really depends on economic conditions in Australia. In terms of key events in the market, clearly watching what the RBA does, watching what the Australian economy does, what does do commodity prices keep helping the mining sector? Is there a potential bubble in the property market, investments and other forms of property investment? We don't have a crystal ball on that. We don't form views on that. It's more being generally aware of where things are going. And obviously the US has gone through a very, very significant change in its political environment, and that could, and suddenly it's got a presidency and two parts of the legislative arm that are now aligned, or are they aligned? Who knows? Will a lot of the policy go through? Will it be stimulatory, and will that cause inflation to shoot up in the US? And what impact that will have on the rest of the world? I think of the sort of things people are looking at. We certainly will keep issuing new XTBs. So we started with 17, we went to 25, and we've increased it. It's just shy of 50 at the moment. We're aiming to get to about 75 by 2/3 of the way through 2017. That's really about offering more choice and giving people a broader set of options, some more model portfolios, etc.